one Bitcoin's going to be worth $10 million.
Yeah, so Bitcoin's been dancing.
Could get 100 basis points.
Today, Brian Estes will explain to us why Bitcoin will be worth $10 million. And Gareth Soloway gives us the latest Bitcoin analysis and his price predictions. Also, U.S. bank investment strategist Rob Howarth believes the Fed could bring a 100 basis points increase. This is the State of Crypto. Subscribe and hit the like button.
So if you look at the total value of gold today, it's worth about 10 trillion. And the total value of Bitcoin is a little bit more than 1 trillion. And if you think about it, if Bitcoin becomes the scarcest asset on earth in 2024, it should be worth more than gold. So to me, that means that Bitcoin should be worth more than $10 trillion in 2024. And that's what this model shows. It just shows it in like a graphical format with dollars. So what this shows is that at the end of 2025, it should be worth about $1 million. And the end of 2029 shows that one Bitcoin should be worth about $10 million. And this model is 95% correlated to the historical price of Bitcoin over the past 12 years. So it's very accurate and it's working as clockwork.
What's going on with Bitcoin?
Yeah, so Bitcoin's been dancing right around that 20,000 level. And the reason why I was harping on 20,000 is because that happened to be the high from the last bull cycle. So in 2017, we saw this unbelievable percentage move to 20,000, and then the bear market started. Finally, we got into the next bull market. And then basically when price came down there, you would expect it to have some bounce and some sideways chop. And that's exactly what we've seen here. It doesn't change my view that Bitcoin is not at a bottom yet. Bitcoin in its normal bear market cycles goes down about 80 to 85%. I think it's only down about 70%. And this is the first bear cycle the Federal Reserve has not been printing money during it, right? So in every past bear market cycle, the Fed's been printing money with QE and QE1, QE2, and all those. And this is this first cycle it isn't printing money. And that makes me wonder if at least we go down 80 to 85%, which gives me that 12 to 13,000 target, or could we actually go even a little bit lower? So I think that we're still going to see another leg down, minimum 12 to 13,000, and then I'll have to reevaluate if it's going to go lower after that.
Okay, we'll be looking
Rob,
for
what are the chances now that we get a 1.0% full point increase in the federal funds rate when we get that meeting next week?
Yeah, market looks like it's pricing in a 25 plus percentage point odds, that 25% odds that we could get 100 basis points. And we'll have to see. There's, the Fed is in their quiet period now, so we won't hear more from them. But I think depending upon how the data moves and how the market moves, the Fed could certainly consider something more aggressive given how sticky really inflation pressures are, even with the more benign producer price index that arrived today.
We are starting earnings season in a few weeks here. I'm just wondering where, given what may or may not happen at next week's Fed meeting, what are we expecting for the earnings season? We've seen a lot of estimates come down, but some people say they haven't come down far enough or faster yet.
Yeah, I mean, we're certainly looking out into 2023 where earnings estimates are coming down a little more quickly than 2022. I think the key question, and this is where the producer price index gives us a good indication that profit margins and pricing power is still doing okay for companies. So as we look into in the next few weeks into earnings season, we're going to be watching very closely what's happening with corporate profit margins. For now, it looks like we're still going to eke out some earnings growth into year end and stay ahead of the game. But there's more questions certainly ahead.